All right, welcome to the weekly analysis. It is February 25th, last week before NFP. Selena, what do you have for the good people?
I'm here. Good afternoon, everybody.
Good afternoon.
Okay. I didn't do a deep dive into all the pairs this week because I know most of us was focusing on Euro JPY and Chef JPY. But okay, are you guys still there? My internet's been tripping lately.
Yeah, we're here.
Okay, y'all still see my screen?
Yes, ma'am.
What is this? So y'all don't see that dumb message going across my screen, no? Okay, cool. All right, so AJ, and I went away just like that. Hold on, y'all. I'm sorry. I knew this was gonna happen. Sorry, Todd. All right, I'm back. So AJ did as projected. However, this pair bought up almost to equal highs before it retraced to the 78 of the field. There was a possible 166 pips. AU, it did as projected. However, price bought up before it sold down to the golden zone, possible 169 pips. CAD Chef did as projected. This is one of those buy until it sells, possible 79 pips. Chef JPY did as projected. There is a 1 hour 9 p.m. Eastern bearish order block for the sale. However, and this is what we use for God's plan. However, if you entered at that time, price decided to buy up 77 pips before it sold down for 222 pips. So this is when we were stressing Todd out, asking what in the world should we do, but it did not touch that 100 pips if we did it that way. The JER 30 did as projected. Once again, this was the seller's sell until it buys. It possible 377 pips. Your JPY was the other pair that we did for God's plan. We got a 4 hour bearish order block at 1 a.m. Eastern. If you entered off the 4 hour instead of the 1 hour time frame, price sold down for 58 pips. Price then brought up for 117 pips. So this was between Sunday and Monday. It bought up Sunday night. You woke up Monday morning, you was in the blue. Then it turned around. I'm sorry, I said that wrong. Yeah, it sold down Sunday night. You were in the blue, and then we woke up Monday morning, and then it started to buy for 117 pips before it began to sell down to the golden zone that we were expecting of the weekly OB, and that happened Thursday. Once price hit the imbalance area of the 4 hour, a few bips above the golden zone, 119 pips, you had the opportunity again for the buy up for 184 more pips. So there were a ton of pips available from EJ this week. EN price did as projected. It meandered 100 in the 100 pip zone for a few days, depending on how you trade. You could have bought and sold this pair off of the 1 hour. When I say that, it was in this zone. So in that zone, it was like I said, 100 pips up and down. And so you could have played in that pair, but that would have stressed me out. There was a 9 p.m. Eastern Tuesday bearish order block for the sale of 151 pips and another opportunity to buy it back up for another 151 pips. GCAD did as projected. Price tapped into the golden zone and then began to buy before it began to retrace back to the golden zone, possible 249 pips. GJ did as projected. Price did not retrace to the golden zone. Price brought up for the week, possible 263 pips. GU did as projected. Price meandered for the first part of the week. There wasn't a clear entry on the 4 hour. However, on the 1 hour, there was a 10 p.m. Eastern bullish order block In order to be able to stay in this trade, you would have needed a 45 pip stop loss or a hedge. I mean, you got stopped out. It bought up 161 pips just past the golden zone. Then price sold down for additional 222 pips. NJ. For me, and Todd may fuss and disagree with me on this, did not do as projected. The pair was very wicky this week. There was a possible 86 pips. However, it did tap into the golden zone and gave a 4-hour bullish order block Monday, 9 a.m. Eastern, for a possible 86 pips. UK, I didn't think it did as projected. Well, it didn't retrace. That's what I should have said. It did buy because it was a bullish order block. Price did give us a 1-8 Eastern bearish order block and sold down for 36 pips. Price then meandered before giving a bullish Tuesday 9 a.m. Eastern and bought up for 178 pips. So that really should be that it did. It did as projected. It just didn't retrace first. And UJ, same scenario. Price gave a 9 p.m. Eastern bullish order block. Directly after that order block, we got a bearish order block. Price did not tap into the golden zone of the order block. Price bought all week, possible 265 pips. So in saying that, it did do as projected. It just did not retrace, which is what we look for at the beginning of the week. But it did buy like it was supposed to, NJ and UCAD as well. It just didn't retrace first. So that's the breakdown of this week. And then for next week, we have, if I can get to the other slide, 1 second. It's not that many order blocks, but I think if we're doing, if we are doing God's plan, I don't think we're going to use the order blocks. I had to stop sharing so I can share again. So the order blocks for this week, if you guys can see my screen, it looks like it's moving slow. Okay, there it goes. ACAD, AN, DIRT 30, G, Euro, GBP, EU, and GBP Chef. And that's all I got, sir.
Good.
Welcome, sir. Thank you.
Yeah, I'm not. I don't know why you feel like I would argue. I didn't tell anybody to use NJ.
I know you didn't, but my job is to do the weekly analysis, so that's
Or
what I
you
did.
can't. Yeah, I know. You know, sometimes it's a lot of folks out there doing their own thing.
I think a lot of people decided to. I know for me, when I was reviewing the pairs last night, it stressed me completely out. I was like looking at the wicks, the meandering all week. So that was another confirmation for me in mastering God's plan because it was a whole lot of stuff going on.
Well, I think
it looked like an NFP week in that in them, in them streets last week.
Whenever there's news that comes out, you know, a lot of times it can have a dramatic effect, especially when the news is skewed one direction. But it's all gravy. You know, for everybody who was in our trade, you know, it worked out, which I was glad to see. You know, not that I doubted it, but you know, it just took forever, you know. And that was a great way to kind of go into that strategy. All right. So let's go over these order blocks. AUD CAD. AUD CAD. Oh yeah, oh yeah. Okay, so I'm on the monthly. Let me go down here to this weekly jank. I'm looking for this to pull back. All right, all I'm gonna do is split this candle. Gonna have to zoom in because there's barely any wick. Okay, I'm gonna get a ruler and measure my retracement. All right, if I retrace to this golden zone, it's about 79 pips, which is not ideal. If it goes to the 61.8, then we'll have about 100 pip retracement. I think that's possible. I just wish there was more runway. And when I drop down to the 15-minute, I want to look for the areas of interest within my zone. There's an order block here. It's been tapped into before, but price could very well go there. I would really like to see price come close this imbalance. And this is a possibility, but it's just not one that I'm gonna take. Now, what I will do is I'll keep this on my chart. I'll keep this marked up, and maybe I need to have a trade. Uh, later on in the week after this has done its thing going up, maybe I can catch the sell down. But for those of you who may be looking for a trade, you're not trading. What I suggest, I think this is still a solid trade. Um, it's just the 100 pips. I don't know that I can get 100 pips in one direction on this buy up. The only way that can happen is if it pushed towards the 78.6. AUD NZD, I feel the exact same way. Again, if you throw the fib on it, the golden zone is going to be right at 90 pips. If it goes a little bit higher than the zone, which it very well could do, if it goes higher than the zone, then you'll have your 100 pips. If not, it'll turn, and I think it can sell down to this other moving average. But at the same time, it is highly likely. All I did was, let me just show you what I did. I went to this monthly. I want to fib the move from here to the top, right? If I fib this move, my golden zone, my golden zone was right across here. So technically, if I drop back down, I think that this needs to pull back and then push into this golden zone. Does that make sense? Y'all see how I got that? Y'all see how I got the price needs to push into the golden zone? So I'm biased for this to pull back first and then push into this golden zone. And then at some point, I don't know, maybe it'll go all the way down. I'm sorry, go ahead.
Um, could you go back to the other time frame that you were on? Was it the 15th? Or you on the daily?
I was on the monthly right here.
Okay, because I mean, that's a very big zone. That looks like an imbalance right there to me. But that's kind of
Right
too.
here.
Mm, I
Or you
thought
mean,
you were looking right here. I'm talking about, yeah, right there.
yeah, yeah. This is
That
definitely
looks a little,
this is definitely an imbalance.
but it looked like the golden zone was somewhere around that imbalance where price could potentially buy, but the zone is so big, I wouldn't know how to.
So look, let me just show you. So when I measured this fib right here, price has already came back and tapped the 78.6. See that? Then it went up like it was going to push on up, to the negative 27, but it pulled back. So all I'm saying is sometimes price double taps your zone and move. I think we need to close or kind of, get close to closing this imbalance. That's why I have this red line right here. So I would say the price goes up first, then closes the imbalance. And then we can, maybe the next week we can look at pushing higher. Doesn't necessarily mean it's going to happen the way that I have it on my chart, but I think it's a good guess, at least. If you take the fib reading from here, then this fib says that price needs to hit the golden zone right around that imbalance area. So I definitely think that price needs to retrace first and push down. I mean, doesn't matter where you look at it from. Uh, all indications are that price needs to push down further before it's going to turn and go up. The only question I have as a trader is, can I get my 100 pips on this retracement? And I'm not convinced that I can get 100. There's 86 to the zone, 106 to the 61.8. Maybe you can get it. I'm just I'm not convinced that I can, so that's not one that I want to trade right now. All right, the dumb 30. Same type of sentiment, guys. Elfie, are you trading this?
Not right now.
I know you normally gamble in this thing.
I haven't traded it in like 2 weeks or so.
It's good. I'm proud of you. All righty, let me drop down so I can see what's going on here. Okay. I definitely know that this is gonna buy up. I just don't know how high. There's 128 points to your golden zone. And if it closes this imbalance on this 1 hour, almost 200 points. I think that's highly probable. I think it's highly probable that price pulls back to this area, to this 15-minute order block, which would close that 1 hour imbalance. I think that's a very probable trade. High probability of success on that trade. And then after that, just look for it, the barbecue. A lot of room to cook for the DAX. I don't even want to look at EG, man. This is a trash can trade. Does anybody trade this? I would just stay away. I wouldn't trade this. I definitely think that it's going to sell, but it's just not. It doesn't get the pip count. It hasn't had the pip count. I don't know that we're going to push back very much from here. I think it's going to be downhill from here. Watch this. We could give out 100 and some pips. Maybe you'll get 119 pips on the way down. I wouldn't look for it to retrace very much further. I would look for it to sell. So I would look for a bearish OB on this 4 hour. Maybe it closed this imbalance.
Todd, when you're finished, I do have a question.
Sure. What's your question?
So I remember last week you were talking about how you enter off the wicks. I personally enter off the blocks, but I was just trying to understand.
You said how I enter off the wicks.
Yeah, you said you enter off the wicks.
So
But
let me see if I understand what you're saying. Let me find a more suitable euro. Okay. So when you say the wicks, are you talking right? Are you talking about this wick down here?
Yeah, you said you enter off the wicks, but that's not how I trade. So I'm just trying to understand, for this strategy, like how you enter so I could be effective.
Okay, hang on. Let me see how many pips that this kind of move. All right. You see how EJ went 168 pips this week? Very little retracement. I think that EJ is going to buy up first before it sells down, right? Are you following that?
No, you're in EU.
Well, that's what I mean. I meant EU. I think EU is going to buy up first.
My pursuit was targeted in a way, but I am still open to seeking those connections and seeing where you go.
So I think the EU is going to buy before it sells. Does that make sense?
I'm listening.
Okay. The only problem I have here is the buy up. The golden zone is 74 pips away. I want it to be 100 pips away. But let's just pretend that this is going to be a 100 pip move. You're asking, when do I enter this trade? My response is, I'm not, I mean, to me, it doesn't matter. I can enter this trade as soon as the market opens because there's 100 pip stop loss, right? There's going to be 100 pip stop loss between my entry and where it would take me out of this trade, right? So let's say I enter somewhere around here, right? And there's 100 pip stop loss. And the market plays around and it pulls back a little bit and you enter right here. In the long run, it doesn't matter because I don't expect the market to push down 100 pips anyway. So your entry is less important. Your entry is less important. Now, what you need to see as a trader, maybe you need to see a break of structure on this 15 minutes. So maybe you need to see price break, pull back, and you enter and it goes up. Or maybe you need to see a break of structure on the 1 hour. So maybe you need to see price break this level. You need to see it break, pull back, and then you enter on the pullback and it goes up. So if you enter here, you still have 100 pip stop loss. If I enter here, I'm going to have 100 pip stop loss from here. My argument is it doesn't matter in the long run whether you enter here or here, as long as you have the 100 pips, between you and your target. Does that make sense?
Yes. Do you enter usually during like the end of Asia or London? Because I did trade some pairs last week, right?
Uh-huh.
Those spreads were like incredibly high.
So thank you. You
And
can't enter, you
the
can't
mix
enter,
was-
you can't enter in that first hour of Asian session because that's when your spreads are that high. Anytime after that first hour, you can enter. So here's what I will tell you. If I don't enter immediately after that first hour, then I'm going to wait until London session. I don't want to enter in the middle of Asia. That's just me personally. And that's the way my trading plan is set. I'm not entering in the middle of Asian session because I only get killed. Every time I enter in the middle of Asian session, my hedge get picked up every time. Now I can enter in the beginning of Asian session and I'll be fine. Right? So you have to come up with your entry techniques and your entry methods based off of your entry criteria, when it comes to trades. So whether that's an hour, a break and retest on the hour, break and retest on the 4 hour, whatever it is for you, that's cool. This trade in particular is not a good trade for me because the pips available to me prior to this trade hitting the golden zone is only 74 pips. I need 100. So if I take this trade, it's going to be after it hits the zone and turns around. And then I believe I can get 100 on the sell. Does that make sense?
Yes.
What if it sells down 30 pips?
That's what I was looking at because
If it sells down 30 pips higher,
Yeah.
yeah,
Yeah,
I mean,
I was looking
then that's
for-
fine. You can enter if you enter after it sells down 30 pips and there's 100 pips available to you, then take the trade.
I'm asking you.
Well, I mean, I think I already have a trade. I already be in a trade by then. Because I already have my trades picked out. You see these red jokers down here?
You're trading US 30. I can't believe it.
Well, I mean, if it's a move that's very high probability, then that's where you'll find me. You don't see me in those speculative moves on the US 30.
Naima, when them G's get the falling on your head, you tend to trade that joint.
So what?
When them G's get to falling down on your head, you tend to trade that joint.
G Chef. G Chef. This is one I wish we got into last week too. That busted up 200 pips right out the gate, huh? Did anybody trade G Chef last week? Or that was G Cat? All right then, folks. Okay. This trade is relatively attractive, guys. I ain't gonna even lie. I ain't gonna even lie to you. This is an attractive trade. Okay. The only reason I kind of hesitate with this trade is because of this huge imbalance right here.
You're not looking for this to sell?
What's that?
You're not looking for this to sell?
I am looking for it to sell.
Oh, well, if there's an imbalance, why are you concerned?
Well, let me explain. Let me explain to you.
That would be a confirmation to me.
No, I think price might go up to that imbalance to mitigate it before going down lower. That's probably why he's concerned.
So,
but see, I would already mark up my imbalance and I would
let me talk.
I was just trying to respond
Okay.
to the gentleman that was talking.
So if you look at this weekly candle, right? The candle closed here. So the way I would normally trade this is to sell it down before it goes up. Right? But because this imbalance is right here, maybe this doesn't, and I think this is an overall sell other than a buy. This imbalance is 122 pips away from where price is right now. That's outside of my tolerance for the God's plan strategy, right? So if I hop in this trade and it goes and closes this imbalance first, right? Before it sells, then I'm going to lose, my trade, which is going to be 4%. I'm not going to take this trade. Does that make sense to you?
Yes.
Now, there's also a high probability, right? Or a possibility that this trade could just close half of this imbalance. So if it closes half of the imbalance, then it'll fall in line with the strategy. And maybe I was a little bit paranoid. It's right there at your 100 pips. Right? 99.5 pips. So if I look and we're around London session, the price is up here somewhere, right? If you want to wait and price is up here somewhere, if price gets up here in Asian session, then yeah, I wouldn't have a problem with taking this trade for a sell, right? If the market takes off and the price pushes up and it puts this trade within 100 pips of this imbalance, the top imbalance, then I wouldn't mind getting in for a sell, because even if it goes and touches the closes imbalance completely, that's only 75 pips, and then it will sell and end in my favor. Does that make sense?
For shizzle.
So that's just the way I see it. I'm not taking this trade right off the bat. This is not it's not clear enough for me to just take the trade. It's about 106 pips to the zone up. So if it does take off and sell, that's cool too. I can be patient enough to wait for it to turn around. If it sells first, it's still going to turn around and go to this imbalance. It'll just be later on versus the first part of the trade. See, so somebody said they think it'll go for this liquidity first, which sell down and then go up, which is what we trade for anyway, right? That's how I normally attack it. But because this imbalance is
Mark, can you bring me my charger, please?
because this imbalance is out of
My laptop charger. It's right there on the table, please. I just saw it's in the red.
because this imbalance is out of my area, I'm not willing to gamble, right? Like we talked about low hanging fruit. I think there are easier trades, like the US 30, to get my money off than this GBP chef.
You said
Yeah.
that. Easier trades.
What's that?
I can't believe you said the US 30 is an easier trade.
If you look at this US 30 trade, Naomi, since you
This
said
is a day in history.
look, if you look at the US 30 trade, it's a lower hanging fruit, right? And it's because of the massive drop that we had last week. US 30 dropped 11, almost 1,200 points last week. And it retraced, I don't know, about 150 points. So if I go to this daily chart, we got a daily bearish order block. And if it doesn't pull back and close this imbalance, right? I know that's 900 points. I don't expect it to go 900 points. So what I do expect, though, is for it to pull back. This 331 points. So I think we'll at least get a 300-point pullback to start the week off. And if you think about our conversation about the fundamentals, you'll see why the dollar had that good run, right? Let's look at the dollar. The dollar had that good run. It needs to retrace, correct? We already talked about what happens when the dollar drops and what happens when the dollar goes up. The dollar went up, the indice went down. Now the dollar needs to pull back, so the indice needs to pull back too, the opposite direction. So if the dollar does pull back to the zone, about 386 points, and I'm not saying you should go point for point on the indice, but if you look at that US 30, if I just hold on for 200 points, 250 points, I can make a lot of loot going to 250 points. When I drop down, I already see that the market has that bullish order block from last week. I'm gonna look for it to pull back a little bit. Once it pulls back, then I can wait for that 15-minute bullish order block. I can hop in and I can roll out. The most attractive thing to me about the US 30 is the volatility will be relatively low, right? Until the US session. So you should have clear signals if you're looking for a US 30 trade to take it back to the top side. Ooh, ooh. USD CAD, I'm not messing with this trade, but I like the I like that it ran up all these pips. I just don't like that it sold down half of them on Friday. USD Chef is attractive. I know Selena don't call this an order block, but you know, she'll get it. She'll get it eventually.
Whatever.
All right, this is about 200 pip move last week. I think that it needs to continue going up a little bit. That's if you notice, I have my my little entry a little bit higher than where price is. I think it needs to push up at least to this order block, right? But there's a lot of area of interest in that yellow. A lot of points of interest. So at any of these 15-minute order blocks in this yellow, this price can turn around. So I think when the market opens, that this needs to push up a little bit more. And then once it pushes up, you know, into this area, then you can look to take this trade. The pip count to the first part of your golden zone is going to be right at 100 pips. So if you're going to take this trade, you need to be paying attention to when this thing turns and starts to burn, okay? When you get your entry, you have your 100 pip stop loss. I think you'll be pretty safe in that USD Chef trade. My personal favorite. It's a man that doesn't need much introduction. My homeboy, UJ. All right, a couple of things I like about UJ is UJ went 257 pips, which gives us at least 100 pip. All right. The second thing I like about UJ is it was all on Friday. Okay. Friday, UJ decided to roll out 250 pips on Friday, right? So even this daily candle, right? Even this daily candle, the retracement to the 50% will be 80, but we know we getting to at least the 61.8, guys. We pulling back. We pulling back probably, you know, 150 pips. We're going to pull back to this area because if you look at the break of structure, that's where the break came from. We need to pull back to that area. This is the trade that I'm going to be looking to hop into. I like that we have structure here. So maybe it goes up a few pips just like U Chef. But as soon as this thing turns and burns, I will hop in for the sell. This is the trade that I'm taking. UJ. Y'all understand the reason why? Y'all understand why we targeting this area?
Yes, I understand.
Yeah.
Yeah, I understand.
Okay, so where am I entering this, Naima?
Well, I mean, the way I look at this chart is a little different. I see a fishing pole move. There's a lot of liquidity at the bottom. If you were to scroll down, well,
Yeah.
I was on the day. Where are you at?
I was on the weekly.
If you go to the weekly, this is just my analysis. Wait, where are you? You were on some chart and I saw liquidity.
Hold on, maybe it's daily. It was a daily.
Go back to the other.
Just the 4 hour.
I saw a bearish order block, but you moved this.
Okay, the bearish order block was over here on the daily, I believe.
Oh yeah. Okay, stop right there. Wait.
Yeah, there's the bearish.
Okay. So there's like a lot of liquidity down at the bottom. So I would call this like a fishing pole move. So I would actually take the entry at I can't move there. if you move your cursor up over to the left, you see where the eye is? Okay, right here. Yeah. I would take my entry there. And I believe that price will sweep the liquidity below on the daily. But I would go down to a lower time frame to kind of get a
Right. So, but you're saying you think it's going to go up a little bit before it pushes down, right?
yes, but I would be looking to sell in that area.
I agree. So this is what I'm saying. At the end of the day, maybe this pushes up 30 or 40 pips, right? At the end of the day, if you enter right here or 30 pips up, if your take profit is 100 pips, I think at the end of the day, it's not going to matter which entry you get. Does that make sense?
Yes, kind of.
And to me, this is the major difference between swing trading and trading on a lower time frame. On a lower time frame, it's absolutely crucial that you get the best entry. In a swing trade, that's not necessarily the case, right? You just want to make sure you enter the trade, right? It doesn't have to be the best entry because your pip count is a lot higher.
Right. And that's where I'm just, trying to readjust. So I'm trying to pay attention to how you do this.
Right. But so this is the trade that I am going to take. I'm also very interested in this US 30 trade. So if the opportunity presents itself, I'll be in both of those trades. I'm not saying that you guys need to get in both of the trades, right? We have to understand who we are as traders. All right. Don't get in multiple trades if you can't manage multiple trades. If you are taking multiple trades, you have to be the adult, right? Which means in this God's plan strategy, right? If I'm trading with 4% of my account and I'm taking 2 trades, it doesn't mean I'm trading with 8%, guys. It means I'm taking the 4% and I'm cutting it in half. And I'm putting half of it on this trade, half of it on the other trade. Okay.
I have a question. Oh, sorry.
No, let me finish this. If 4% is too high and you want to trade with 2, that's on you. You are control of what you are doing. So you have to take ownership in that regard. All right, go ahead, Naima.
Sorry to interrupt you. I thought you were finished.
No, that's all good.
So, I was kind of studying UJ last week, and I noticed, of course, that it's going to move during Tokyo and during New York. But I wanted to know, I guess, do I just put an alert on my phone to say, okay, this is when I want to kind of start looking
I would definitely put an alert. Like if you think your entry is on your chart, you can just right click and add your alert. Or on your phone, you can do the same thing if you got the TradingView app. There's a plus symbol on your app. You just plus and you can key in the price that you feel like you need to be notified. If it's 136.60, this is 136.67, but you can have it notify you a few pips before because we never know how fast it's going to be moving. But this
right. Would you suggest that I start looking at this during Tokyo or New York?
Well, I think you have to look at it during Tokyo. I think an hour after the market opens, everybody needs to look and see where their pair is, right? So if I'm trading UJ and I know the market opens at 5 p.m. Eastern time tomorrow, at 6 p.m., no later than 6 p.m., I need to be looking. Really, you should probably be looking at 5:45 because you want to see what price did within that hour that you couldn't trade, because the market is moving. You just can't trade it. What they're doing is they're filling orders, of those the big guys. They're putting those orders in. So maybe the market is up here in that hour of trading that you couldn't enter. And all you have to do is enter at that point at 6 o'clock. And maybe that's all you have to do. That's the beauty of that hour transpiring before we can get into the trade. Is maybe maybe the market is already at the level that we needed it to get to, and we can enter now instead of waiting until midnight to enter on the London session. Now, I want everybody to understand that a lot of times you're going to get that entry on the Asian session and you're going to push in the profit. And then on London, it's going to retrace, or right before London, it'll retrace and grab the liquidity right above where you enter. And then it'll push down again. Any
So
questions?
if you were to swing this, right, like say if you take your 100 pips, right, and you were to swing this, like say for the rest of the week, would you take it down to 135?
You said for the rest of the week?
Yeah.
Well, listen, I don't believe that this is going to break through this daily order block. The dollar is definitely getting stronger. I think the dollar is going to rise. I think the indices are going to sell this week still. I think the dollar is going to get stronger this week. If you look at what we said last week, right? This is where the dollar needs to come. It needs to come tap into that monthly order block.
Got you.
This is
Okay.
what the market is doing. Now, I'm not saying that this is going to go straight up and tap in, right? But I think there's a reason why we're getting the movement. So if you think about this for a minute, Naima, this is February. The month, this is the last 2 days before the end of the month. This candle is going to close. Then this might push down, right? The dollar might drop and tap into the order block and buy higher. Or it might not drop all the way down and tap in. It might just drop down a little bit and then buy higher, right? So maybe the first 2 days this sells. Maybe the first 2 days this sells. And it gets close to this wick. If you look where we have this price coming, it's pretty close to this wick. And the 78.6 is the top of this wick. So maybe price goes right to the 78.6 and then buys up. I don't know, but the point is you can see a case to where maybe this sells down until the 1st. When is the 1st? Wednesday? Does anybody have it?
The first is,
It's Wednesday.
yeah, it is Wednesday.
Yeah, so maybe this takes 2 days or 3 days to sell. And then maybe Wednesday, when the new candle opens up, we're at the same wick level. Or maybe this sells, and then Wednesday it drops a little bit further and touches this wick, and it doesn't leave an imbalance, and then price buys up. I don't know how it's going to work. None of us do. But we can anticipate certain things based on how we understand that price moves. So everybody in here, I'm just going to delete all this stuff right now so we can look at this monthly chart. Everybody in here understands that most candles leave wicks, right? So if you look at the end of this month, price dropped and then it left the wick. This new month started, it came down at the end of the month, it left the wick. At the end of this month, I expect us to leave a wick. I mean, I just think that that's a good assumption based on how most candles close with a wick. Does that make sense? So
Is this what you were talking about? How you trade off the wicks? Is that what you were?
yeah, I mean, yes. I mean, some things you can assume with a high degree of accuracy, right? Like we can assume, with a high degree of accuracy that we're probably going to get a wick, right? So maybe the first day, maybe the first day it goes up a little bit, right? Maybe this candle goes up and touches this wick. I don't know. And before the wick starts to happen. But I know with a pretty high degree of accuracy that there's a good chance that this candle is going to close with a wick. So
I'm gonna be there to sell it.
I can expect that this is going to sell going into the next candle, right? Which puts us on the correct side of the trade because we anticipate selling this. Does that make sense?
For
Yes.
sure. For sure.
Absolutely.
Yep.
All right. So yes, it definitely this is the power of three concept. That's all that is, the power of three concept. And this is why I say as a trader, you have to pick your trades, right? So this trade is even more attractive when you think about it from this standpoint, right? Because we understand that there should be a wick, at the top of this candle. With these other trades, this is the same way. A wick needs to be at the top of this candle. So with these other trades that you're taking, maybe you won't be able to say that. Maybe you'll say, well, I don't know. Maybe there's some question marks. But this is just another level of confluence, that states why something is the way it is, right? It's just another layer of confluence. I am definitely looking forward to this trade. Like, I think even if you don't hedge and this thing goes out of your zone, you need to hedge it, because I think with a pretty high degree of certainty that this is going to sell down and give a wick. Do I have any questions over anything we covered? Bruh, everybody's crystal.
I think we ready, Todd.
Yeah, I guess we'll find out soon enough.
I'm gonna set it and leave it and keep it moving.
Them bullets start flying.
That's when it
Nice to
happens,
hear us
when those
in our
bullets
mouth.
start flying.
We'll go out the window when we get hit in our mouth.
I know. I'll be like, Todd. But this is great. Thank you so much.
Thanks, Todd.
Yeah,
Thank
let's
you.